volatility hit the roof in February. Several exchange-traded products in the volatility space essentially blew up. Are you satisfied that leveraged and inverse ETFs and volatility products don't constitute any kind of systemic risk to the system?
So let me take a step back and speak generally. I am always on the lookout for risks that we don't recognize or risks that we have misassessed. Whether it's in a product space or another space. I'm not going to comment on specific products, but I come to work every day asking our staff, are there pockets of risk that we're not recognizing or that when we look at them, we're way underestimating? And leverage, as you and I both know, leverage that you don't see or leverage that's excessive has been a hallmark of problems for a long time.
One of the areas that we spend a lot of time on is IPOs. I've been covering them for 20 years. It's been very depressing to see the IPO market slowly go down. I think the IPO market's 50% lower than it was 20 years ago. There's 3,400 companies in the Wilshire 5,000. That is a disgraceful number. You've been very passionate.
That's a 10b-5 violation.
You have been very passionate about how to change that. Give us some insight into what we can do to get more companies to go public.
So I am passionate about it because if this is our total equity investment space, the private part of it used to be this size. It's probably now this size. So half of our equity investment space is now private, which means it's away from our Main Street investors. I don't like that as a result, as a general policy matter, because we're shrinking the opportunities for our Main Street investors. There are a lot of drivers of it. We're looking at those drivers. Some point to regulation, some point to the availability of private capital, some point to secondary trading. It's probably all of those, but like you, Bob, I would like to see the suite of opportunities for our Main Street investors be very broad.
Let me move on. I'm going to hit you with several questions on different topics right now. Cybersecurity. You've been increasing efforts recently to monitor cyber crimes. Can you tell us what you're doing to stay on top of this?
Cyber crimes come in many forms. Some of them are old frauds that we know about, just cyber-enabled. Some of them are new. We formed a cyber group in our enforcement division. These are people who have expertise in the dark web, expertise in understanding hacking, hacking, taking information, using it to trade on. This is an area we're focused on. I don't want to give away too many of our investigative secrets, but we have people dedicated.
Are you beefing up the department that handles this? I mean, obviously this is a major issue. We've had issues about how timely companies need to be in reporting cyber violations, for example. Are you going to give more careful guidance on when companies are required to tell us about when they've had breaches?
So in the area of disclosure, we did come out recently with guidance for public companies on how to look at a cyber incident and how to assess whether disclosure should be made. I've said generally, since I started in this job, that the level of disclosure in the market, both as a general matter about cyber risk and of specific incidents, is not where I would like to see it. I think it's been improving. I think the public has a better sense of how cyber dependent we are, and therefore the level of cyber risk, but I'd like to see more.